Now, our third panel of the day is on digitalisation in finance, a driver of financial inclusion. The moderator will be Paulina Demek-Hack. She is the Director for General Affairs at the European Commission's DG FISMA. Paulina has worked on financial service matters in the European Commission in different positions since she joined the Commission in 2004, including in the private office of then Commissioner Michel Barnier, who subsequently became the Vice President of the European Commission. And she worked as financial advisor in the private office of the then European Commission President, Jean-Claude Juncker. Paulina, panel, the stage is yours. I'll ask that this be removed. Thank you.
Thank you very much, Aidas, and good afternoon to everyone. It's a great pleasure and an honor to moderate this panel. I want to start by thanking Jean-Paul Sarvet and his team here at FSMA for hosting this conference for us, and of course also many thanks to my team in DG FISMA for the organization. In this panel, we're going to try to do a little bit of a deep dive into the issue of digital in the context of financial inclusion. It's come up a couple of times already this morning in the various panels, in the various interventions. On the one hand, of course, digital means helping financial inclusion, making everyone has their banking app on their phone. Everything much easier to buy financial products, to handle your finances. But then on the other hand, of course, also the challenges. People that are maybe a little bit less digital, there can be connectivity problems still, even in Europe, believe it or not. And we have the group of young people, and that's something which I find is quite interesting because it was shown also by the Eurobarometer that young people are actually usually not so financially literate, not so well informed. Young people are very, very digital, but on the other hand, maybe a little bit short attention span and maybe more likely to be victims of fraud and scams or becoming very, very impressed by influencers, etc. So some of the issues I think we will try to dig a little bit deeper into during this panel. I'm very, very grateful to my brilliant panelists who join me here on the stage. Wim Meijs, who is the Chief Executive Officer of the European Banking Federation, but has also been working a lot on financial education in the Netherlands. We have Mindy Parkinen, who is the laureate of the Youth Policy Dialogue on the Future of Finance. And I'm really happy to have Mindy here with us because we all tend to speak on behalf of young people. But for once, we have a young person who will then speak on behalf of herself and of young people. So thank you so much for joining us. We have Tom Ahrens, who is a Chief Executive Officer and co-founder of the company Peaks, which is working on simple investment product for retail investors. We have Colleen Dube, Chief Executive Officer from the Irish National Adult Literacy Agency. And we have Anne-Sophie Parent, who is the chair of, I guess, it's your title, of Age Platform Europe. So really distinguished speakers who will all bring their perspective to this panel. And that was something I took with me also from discussion this morning, how interesting it is to get the very kind of different perspectives of different representatives on this very broad issue of financial inclusion, financial education, financial resilience. We will kick off with a very kind of short round of not necessarily introductory remarks, but every panelist will have the opportunity to share a little bit their views, their passion, their perspective on the issue of digital in the context of financial inclusion. And for this round, I will start with Wim. Please.
Good afternoon. Thank you, Paulina. I also would like to thank, and it is obvious, Commissioner McGuinness and Chairman Servais, because it shows leadership, it shows, as Jean-Paul said, risk, and it also shows the ability of institutions to get people together in the room. Because I see many well-known faces, all people that do fantastic work in financial literacy. So how did I get involved myself? I've been involved in financial literacy for 20 years. And it's half by accident, to tell you, to be honest, because it has to do with the fact that my family consists of many teachers, on one hand, and on the other hand, it's my conviction. I've been 31 years in banking now, I realize, that banks have a social role. I am not a believer in a financial economy. I believe in one economy, and banks should be close to communities and play their role. And that together gave me the chance to be one of the founders in the Netherlands of the Wijzer in Geldzaken or MoneyWise platform, which was a very good public-private partnership. And it is this public-private partnership that was mentioned earlier today that is so important because it's only through working together, listening to everybody, and listening also to critical notes that we can get further. So what we do at the European Bank Federation, because when I was moved from the Netherlands to Brussels, I just took with me the ideas that I had learned from people there, is we organize European Money Week at the same time as the Global Money Week, where we bring together the knowledge of all the countries and see if we can add, and again, the word ecosystem and partnership is an important one. We also organize European Money Quiz, which was now played, we played it for 5 years, but which has now been played by over 1 million kids in 28 countries. And we have, and I'm very proud to say that we have one of the installations in the Wikifin Lab, because I think that Wikifin Lab is one of the great strides forward. So we are deeply involved. But now if you talk about digitalization, and that is, it's an opportunity and a risk. And the way I got involved is, and that's why we started in that, if you think that 1 in 5 people is financially literate, but 1 in 4 is really digitally literate. And with the opportunities, with the ease of using your phone and the money becoming virtually, there is also risks that we exclude people, that we exclude the elderly, that we are not able to deal with that with people, and that we actually cause accidents. Because if you think about awareness and fraud and the way in which people can be defrauded of their savings, it means that we need to work, and again, here are new people in that ecosystem, with ENISA and Europol on awareness campaigns, but it also means that we have to speak with all stakeholders, including, for instance, workers' representatives through UNI, to make sure that everybody takes the opportunity and not the risk of digital.
Thank you very much, Wim. And I think also interesting to some quite concrete ideas that you put out there. Sometimes we talk a lot and we have a lot of ideas, but maybe sometimes we don't get so concrete. So I think that was quite useful. And of course, we had the beautiful experience in the Wikifin Lab here, where you really have very concrete tools of getting, seeing living the risks of some investments, etc. But with that, I move on to Anne-Sophie and your perspective, please.
Yes. Thank you very much. Building on what Wim was saying and what we just heard from Minister van Peteghem, I would just like to stress that financial inclusion, first of all, cannot go without digital financial inclusion today, that's for sure. It leaves quite many people out of the scope. Wim, you raised it. The challenges, it's not only the elderly, believe me, it's 40% or even 46% of the population in Belgium. There was a study by the King Baldwin Foundation on that. In particular, you may be able to use your phone and for many, many things, but many people do not trust themselves to start with, and they do not trust the system, and they do not trust their PSP to be able to solve whatever issues they have, in particular if they have made a mistake themselves or if they have been victim of frauds. I love the reference to informed choice, because I know many people, having worked on different working groups in the ERPB and meeting many people in my life, who made informed choices long years ago, for example, and they lost part or all their pension savings due to the last crisis. And yet the decisions they made at the time they made it was an informed choice. So no one has a crystal ball. That's what my banker is telling me. When I go and visit him, it was just a few days ago, asking what was now the best offer on the Belgian market. You know how difficult it is to get something worth out of your money. The first sentence was, I wish I had a crystal ball. I cannot tell you if this product, which is sold to people who are very on the defensive, don't like rates, just the way the minister presented most of the people in Belgium. And yet he said, I can't predict you will get your money back. The only guarantee is you get as much as you've put in. That's the best choice. And you may even lose quite a lot of your money because nobody knows. We are not living in the same world as we used to even a few years ago. With artificial intelligence, with all the dark net issues, this is a totally different world. And economically also. If you read the news, or the newspaper, or you listen to the news, something is going to happen. You don't know when. That's the question. It's not whether it is going to happen, it's when it will happen. So I can understand, I must say, people who are, staying with their saving accounts because they don't want to take any risks. There is this deposit guarantee. Okay, it's not the money you put in real value, but at least you get something out if something goes very bad. So how are we going to rebuild this trust in the system, but also in the people themselves, that they are indeed making an informed choice when they are getting more literate, financially literate? And that's the big challenge. But we have to get there, otherwise the whole system will collapse. So trust has to be built, but financial inclusion is essential, but it's not enough.
No, I think you're absolutely right, and especially, of course, as you were alluding to, in the current very complicated geopolitical context, there's a lot of uncertainty at all levels, and of course, that uncertainty is something that people then feel also in their financial choices. Interesting, I thought, Anne-Sophie, that you mentioned the issue of shame also, that if you fall victim of a scam or some kind of cyber thing that people feel very embarrassed to speak about it, although frankly these days it probably happens to a lot of people and it's nothing to be ashamed of. But in terms of where you can go with your savings, I think Tom, he took it in his own hands and thought there are not enough good, simple products out there. So tell us your story, please, Tom.
True. So I'm Tom Ahrens. I'm already in the retail investment space since 2000, almost 23 years. And I've been on all the sides. So I've started out as an analyst on structured products. I learned all. Sorry, I had to judge them, and I saw like all the bad products that were sold, and I saw the problems in 2008. Then I switched to the largest bank in the Netherlands to actually digitally transform their investment service. So I built the first investment app in the Netherlands, first robo-advisor, these things. And there I gave a lot of presentations to people actually like you, but actually to wealthy people about investing. And what I saw always, that the audience consists of about 80% of old, grey men in blue suits. My sisters, they were much younger than me. I wouldn't see them there. My mom, I wouldn't see her. My friends, also not. All the people on the streets, they don't get this knowledge. They're excluded. And what I actually sent those men of about 60, 70 years old, they're talking about investing, but actually you should start when you are young. But nobody is doing it. And at the bank, I saw how difficult it was to transform savers into investors. So I started researching this problem, and that's actually where PIX came about, on how can we help people start saving and investing in a responsible way. So with a simple product that is good for them. A little bit about that. So basically what we did for a year, interviewed every week 8 people saying, this is the design, this is how it works, what are your, why don't you start? Did week after week after week. And after 52 weeks, we launched our product, which was basically the following. So we saw the following problems. People find investing too complex. Secondly, they don't have the money. So a lot of people don't have money to save or have problems with saving. Third, they feel it's very risky because of all the scandals. And fourth, they lack the time. So many people are busy, so they don't have the time to spend on it. So we said, okay, can we remove those barriers and help people start? And the way we did it, and we're the first one in Europe, I'm still proud of it, that we introduced this roundup concept. So basically you could link your debit card to our product, to our app. Whenever you would buy a cup of coffee or whatever, our app would round up the amount to the next euro. So let's say you pay a coffee €2.50, and 50 cents would be globally invested in a well-diversified portfolio of ETFs, just as you learn in university. And that actually removed a lot of barriers, I have to say, together with communication. So simple communication, very clear. And second, design. Design of choice. Limited choices, simple choices. So people feel confident. And actually that worked. So if your first step into the investment world is investing 50 cents, everyone can miss it. And then you come to literacy. So when you start, you learn. You build experience. You can give knowledge to the person because it's relevant. And with knowledge and with experience comes confidence. That's actually, in my feeling, the way to grow. And hopefully today I can share more of my learnings in this journey and insights.
Thank you, Tom. I will ask a question now, and I haven't warned you about this question, so maybe you'll not be able to answer. But it just came to my mind when you were describing your activities. Do you have any kind of approximate breakdown in terms of your clients, in terms of men, women, age groups?
Yeah, so interestingly, our app is pink, and it's designed by women, and also all the communication, because we wanted to do it differently than all the other products out there. So approximately 40% of our clients are women, which is still not 50%. But it's already twice as much as with the average bank in the Netherlands. The average age is 37. The median, however, is 32. We have also some very old customers. So we're able to serve this younger generation. And in the last 5 years, about 20% of all new investors in the Dutch market started with us. For that, I'm of course proud because it contributes to the mission.
Excellent, thank you. Colleen, please.
So firstly, I'd like to thank the Commissioner for the invitation, and I suppose for everyone who participated in organising this event. I suppose just to say, as has been introduced, I'm the CEO of the National Adult Literacy Agency in Ireland, which is actually a registered charity. We're part of the civil society. NALA has been around since 1980 and is a membership-based organisation, and largely was set up to represent the interests of individuals, particularly adults, with unmet literacy needs. So I'm kind of speaking for them to a certain extent. I wish some of those individuals could be here, but they're kind of represented in a report that the Commissioner launched for us a couple of years ago. So what we do in the National Adult Literacy Agency is we advocate and on behalf of individuals with unmet literacy needs. We believe that literacy is a human right. We have worked to advocate that there is an adult literacy strategy in Ireland, and that was launched in 2021, and we're currently collaborating with Ireland's Department of Finance on a forthcoming financial literacy strategy. We also provide e-learning and distance learning service to individuals throughout the country. We also provide professional development for tutors, and we also engage in a lot of what we would call maybe literacy awareness training or creating more literacy-friendly organisations, which I think is really relevant to the conversations today. And part of that, and we've heard a lot about the importance of kind of making things accessible and simple, and one vehicle to that is the use of plain language and plain English, and that's a service that we offer. I suppose where our NALA got involved in terms of financial literacy, it is something that NALA did about 15 years ago. I joined as Executive Director or CEO in 20, right in the middle of the COVID crisis. I suppose I brought financial literacy. It's my own kind of personal passion. And I suppose, I might be a bit of an outlier in this, in that I had a very savvy Irish grandmother and a very savvy, what we would call kind of swamp Yankee grandmother. And they were both left on their own quite young as mothers. I learned the art of couponing from my grandmother. So I always shop around and I always look for the best bargain. But I also learned from my Irish grandmother the importance, and there's kind of an expression in Irish about cutting the cloth to the measure and not living beyond your means. So it was instilled in me from a very young age, and I had to, for a variety of personal circumstances, to be financially resilient, be financially independent, and unbeknownst to me, become financially literate. Have my first savings passbook at the age of 10. Having my first pension very, very young. So I know I'm an outlier in terms of women, and I suppose I've brought that belief that we all have the right and we also have the responsibilities to be financially literate, to be financially responsible, and it's part of the work that we do with NALA, and I can talk about a little bit more.
Excellent, thank you. I think interesting what you said also about it's a detail, but I think it's an interesting one, the savings book, because I think there's also studies suggesting that today's kids, since they never see money any longer, it's actually...
But they are looking for cash again.
It's more kind of difficult to get a real sense of the value of money when you don't see the kind of the little books and I remember my little savings books with the in and outs. It's very interesting. We will move to Mandy then for the last intervention in the first round.
Yes. Thank you. So my generation grew up with a lot of accessibility to information through Google, and the next generation is getting information through TikTok and then I guess through ChatGPT. But although we are digital natives, it was very concerning to see the result from the Eurobarometer stating that the group with the lowest financial literacy score is the young people who are the young people who only score, where only 1/4 of all the respondents had a high enough score. So that's why I think that financial literacy is something that needs to be talked about early on, and a discussion that needs to be talked about so that the topic of personal finance is natural and so that young people feel confident also later on. And for example, which was mentioned by one of the keynotes, some people only learn about personal finance once they go to university or turn 18. But if they start at this age, a lot of knowledge is lost. And many young people already start working at 15 or 16, meaning that they start earning their own money, which is a good learning lesson in itself. You learn how to manage your own budget and spending, but I believe that teenagers are capable of learning much more than that, which has been proved in some countries where the financial literacy score is much higher than in others. So one part of this that also apps can do and that banks can do is to have good user experience for their services and good product design that focuses on young people and what they want. For example, in Sweden, many parents are using these kind of weekly pocket money apps to show their children how to handle their own money at an early age, and in that way making it a natural discussion to talk about money. And of course this is good, but it's from the parents' initiative, because those children who don't learn this at home also might have a lower interest in learning personal finance later on. For example, I would draw the comparison to parents who don't read books to their children, have children with much smaller vocabularies. So in the same sense, you can't rely on the upbringing that children have, which is why I'm glad that the EU and OECD have designed this framework together about financial literacy. But with this said, I think it is very important to bring the young people into the design, which has also been mentioned here, and make things relatable so that it can also be inclusive.
Thank you very much. I think that is absolutely true. And I think also precisely how do you reach all groups of societies? I think as you rightly said, parents who take the time to sit down and speak to their kids about financing, those kids probably are more financially literate already at an earlier age, whereas of course in other circumstances it's maybe much more complicated, which I think also brings the issue of if you want to have financial education in the schools, you probably would want to start early enough. I was at another conference about this subject recently where someone made a point that in some schools you start speaking about financial inclusion, financial literacy in college, which is all very interesting, but those who then don't go to college and go on to other trainings, they would not then actually get that kind of knowledge from the teachers. So a lot of, I think, different angles to think of here. So we have already spoken quite a lot about the opportunities, but also the risks of digitalization. But I will still allow the panelists another short round on this. We touched a little bit on the exclusion, 40%. I thought that was a striking number that Anne-Sophie was mentioning. Cyber risk has been mentioned as well. But we will do a short round, as I said, on that, more on the opportunities, risks and challenges around digital. And I will start with Colleen now.
Right, so there's two sides to this coin, and sorry for the financial metaphor there. But in terms of looking at both the opportunities and challenges, both for, I suppose, financial services, but also for individuals who are trying to access them. And I think we heard the Minister speak, I think he mentioned the word 3 times, accessible in his remarks in terms of priorities. And I think it's really important that we, I suppose, a factor, what do we mean by accessible? Because there are so many different individuals and cohorts that are trying to access financial services. All of them have very different needs, both in terms of the information, the design, and I think as Tom has mentioned, even in terms of designing his app, how is that taken into account? And the need to look at accessible design and user-informed design, I think it needs to come into play. I suppose one factor that came out of our recent research is that particularly adults that may have an intellectual disability, they want to make their own financial decisions. But the way particularly digital services are designed, there isn't enough time for them to reflect and perhaps make the right decision. If an individual has dyslexia or dyspraxia, that can be very challenging in terms of multi-factor authentication. Those are just 2 examples. So I think we need to really think about what do we mean by accessible and how do we build that into kind of design. I have a tendency to use alliteration, which annoys a lot of people. But that being said, we've heard a lot about trust, and that has come out quite strongly in terms of its confidence in financial institutions, its confidence and trust in digital, generally speaking, and people's capabilities. And it's how do we build those capabilities? We also, I suppose one of the key challenges, we know that 11% of OECD countries don't have connectivity, but that is greater, and we know in Ireland, in the West, in rural areas. So how do we build that connectivity? And I think there's a real opportunity in relation to collaboration. There's once again kind of an Irish tradition, which is known as MEHL, which is people working collectively and collaboratively. The banks have always been, and I think it was mentioned, a really strong social force. We have a lot of empty buildings now, a lot of banks. Can they not be repurposed in terms of digital centres where people can access, whether it's like Wikifin or accessing the library? So I think there are real opportunities for communities, government, civil society to work together to bridge that digital divide. I'll just stop there. I have a lot more C's. But I know
no, absolutely. But I think and I think that's a theme that's come through a lot during the panel this morning, and also the Vice Prime Minister before, right now, that this collective kind of thinking, how can we bring the different kind of parts of society together? Financial sector obviously being a part, policymakers being one part, but it's much broader than that. So I think what you were saying and in terms of...
And also citizens. I think they need to be part of that design, because we've heard, and I was speaking over the lunch, in terms of how we measure digital literacy and, and financial literacy. But is it what Joe and Mary want? Coming back to what Jean-Paul said, they may not know the terms for it. And our experiences have been individuals that actually are on the brink of financial inclusion are actually really good at managing their finances because they have very little, but they're not interested in capital markets products. They're interested in managing their money. So we do need to look at what is it that John and Mary and their children actually really need at particular points in their lives.
Absolutely, absolutely. I think it starts with kind of the budgeting and then it kind of evolves. Anne-Sophie, please.
I understood that this session is around mainly the third aspect of covered by the conference. So I would like to remind everybody that there is a European Accessibility Act, which is supposed to be implemented by June 25. Unfortunately, so far, what we notice on the ground is that some have taken initiatives, very good initiatives, but those are silos initiatives. And there seems to be some kind of competition between service providers. So using the accessibility of their products, trying to get an advantage on the others. When they feel that they have lost the race, they are not so longer interested to become as accessible as possible. I just want to mention I've been asked to be disruptive, so don't take it as a personal critics or anything. It's my job here, okay? So that is something where the EU should do and do something very fast. Why? Because the lack of accessibility opens the door and puts this huge number of people who really face barriers to use digital financial services at a much higher risk of falling victims of frauds and not even knowing where to go or whom to call to get something done to stop it or get it refunded. That's very urgent. Why? Because the fraudsters are not waiting for us to get to an agreement about how to make accessible financial services, which on top of that will have to be interoperable for the whole market. Otherwise, you are creating barriers, preventing people who have to use those accessible products from traveling somewhere else. That's one thing. Then resilience is something nobody mentioned yet here, but I would like to mention something which is connected to accessibility and inclusion, which is the need to maintain a strong cash infrastructure. And here we really are so thankful to the European Central Bank and the European Commission for what they are doing to maintain a cash infrastructure that functions, at least in the euro area. But it's really urgent for some countries to do more than what they are doing now because and that was understandable. This was an informed choice at that time. They decided to go as cashless as possible because that was avoiding black market, that was easier, they thought at the time, to tackle anti-money laundering and funding of terrorism and all that. That's proved wrong, actually, because they're doing better with artificial intelligence, in fact, to collect quite a lot of money they shouldn't have access to. But they forgot that cash will remain essential because we have those cyber threats above us, whether we like it or not, it is there, which are going to put us really at risk for resilience. And we may, from one day to the next, this can happen because, like in Ukraine, a neighbor is unfriendly to you and invade you and breaks everything. You have to be able to rely on cash also because internet breaks down, because your phone is flat. You go shopping and you have nothing else than digital means. No, that shouldn't be the case. Cash has to remain. It has to be really adequately distributed and accessible, and you should be also able to deposit because we see merchants struggling now to go and deposit what they have been able to collect in cash because people are using cash again more after COVID. We told them that you shouldn't take the decline in cash use due to COVID as a sign that we were really moving fast on digital means. No, both are needed, and the proposal for the digital euro that complements also the legal status of cash are two wonderful instruments that we hope member states and the parliament will agree, and we are going to move fast. That's a little message from the work we do with the ERPB on the digital euro and on maintaining access to cash. And here Belgium has really done a wonderful thing. They first adopted a law to make it compulsory for all merchants to offer at least one digital payment instruments to the customers. That was last year. It was great, but it was not enough. They got a big campaign that said, now you need to have the equivalent legislation, really making it not only something on paper, that the cash, the coins, and the banknotes have legal status, and that means there should be mandatory acceptance of cash also by all merchants, with a few exceptions if really they are not able to manage cash. And that goes also for the public authorities. Most of them have completely stopped offering payments of your local taxes, of your whatever, your fines or whatever, in cash, which is a problem. And there is a EU ECG ruling on that. So we think that for the moment the discussions are going really well. The legislation on the table are really going to make a change and will really help a lot financial inclusion of large numbers of people because they're going to remove those barriers. The digital euro it's a key principle, is going to be inclusive of those groups, persons with disabilities, older persons, young children, and all those who struggle to manage with digital means. And at the same time, it's going to maintain cash, because unless we have both, we are never going to be completely resilient and able to really sustain the economy properly.
Well, thank you, Hans, for bringing that dimension. I think it's a really important one. As you say, you really want to have the two systems in parallel. I mean, I'm Swedish by passport, and Sweden is, I think, one of the countries that come very, very far in digitalization. But now recently, the debate has really come back on making sure that there also is cash in society, precisely for the reasons that you were mentioning, Ann-Sofi. And when we were preparing this panel, Ann-Sofi said something which was quite pertinent. The title of this panel is, as I mentioned, Digitalization in Finance, a Driver of Financial Inclusion. And you were saying, Ann-Sofi, maybe there should be a question mark after that, which there is not, but I think this panel is adding, we're adding the question mark, exactly. I would turn to you, Mindy, if there's something you would want to add, maybe from the perspective of young people being influenced by influencer, taking quick decisions on TikTok, etc.
Yes, Ann-Sofi, you mentioned the threat of war. And I also saw that according to a Swedish youth barometer, 44% of all young people feel scared for the future. And as a result, they have started getting an interest in investing, because that would give them more money for the future. But it can turn backwards, focusing on the threats of getting scammed online or having to prepare for the future because it is uncertain because of climate change and other geopolitical threats. So when talking about financial inclusion and using digital tools to encourage young people to learn more, I think it's better to focus on the opportunities and the positive parts, such as getting more control over your life. For example, we also saw with the results presented at the beginning that it's often women who end up in the pay gaps and represent the people who are less financially literate. And I come from Finland. I find this quite interesting because we are also a very equal country, but we don't have equal pay, where it's 0% yet. So I really would want financial literacy, whether it comes from school or from apps, helping their customers build more confidence, focusing on the opportunities and why it is important to build that confidence that you should have throughout your whole life. You shouldn't rely on AI or a family member or spouse to handle your finances for you. You should learn that from the beginning instead.
Absolutely. I think that was something we also asked in that Eurobarometer, which have been referred to several times already, including this morning. Are you the one in the family who's actually taking the financial decisions? And that, of course, you see, unsurprisingly, maybe also a big kind of the famous gender gap comes back there as well. Tom, from your perspective.
Yeah, I was thinking, I actually prepared something differently, but listening to you, I think digitalization, technology can really give access and make the financial world more inclusive. But there's also this risk, I think, which I feel, so maybe from a positive perspective, in our case, we help people save money in a responsible way. But there are also a lot of apps, platforms, and actually just experienced Wikifin, how you are tricked and gamed, who also give you access very easily to, let's say, all kinds of very risky trading. And there's a huge information asymmetry between the consumer or the person on the street and the provider, who often have a lot of experience. And there I think it's very important to have good policies in place to protect the consumer, to make sure that financial inclusion actually means giving access to good products which help you further in life, because that will give you confidence about your future, feel better about yourself. I think that's what I have to add. And that also from a business perspective, I think it's also, if you do that, it's a great opportunity. You mentioned women, but yeah, let's say from a business perspective, if you include more people, your addressable market is larger. It's a bigger business opportunity. And I also feel that with the current generation, so we have a lot of young employees that having a good purpose, so making the world a little bit better. And it's also great to attract talent. Yeah.
No, I think that's very right. The of course, inbuilt asymmetry of information, of knowledge between the consumer on the one hand and the financial services provider on the other hand. I think that was something that was mentioned also in some of the earlier panels that we focus. Of course, this is a day about financial literacy and resilience and inclusion, but it's true that the other side of that coin, come back to the coin again, is of course that there also has to be people who give good advice to consumers who I mean, it is in everyone's own interest to be financially literate and understand, but we also need to create a world in which the advice consumers are getting is fair, is transparent, is clear, and where consumers are advised to buy products that fit their particular needs. Tom, you want to come back on that?
Yeah, maybe to add something to the advice. So, in my previous career, I was helping more wealthier people. They got financial advice, and through the years, also after financial crisis, the regulation surrounding financial advice increased, which actually made the cost of giving advice go up. So it's actually less accessible for a lot of people. And there I think maybe policies have to change a bit, loosen up on the financial advice part, but make sure that the people who give the financial advice, and that can also be influencers on TikTok, but that they at least are knowledgeable and that they meet certain standards, have a background or have learned themselves about the financial products they talked about. There I think you can set entry barriers.
And I think that's what we try to do from a Commission policy perspective with our recent retail investment strategy, a legal proposal, which is going through the legislative system precisely to try to deal with this asymmetry. But Wim, you've been silent for a long time.
Yeah, well, I'm enthusiastically listening, and I want to go more into direct banking, but investment advice is indeed two things. One thing you say is, indeed, how do you deal with that? And then I go back to the lady from Uni Europa who said how important workers are. Good advice from workers who go to work every day and do that. And social partners have last year, or 2 years ago already, signed a joint declaration in which they say it is a tool for the productivity, improving the quality of service to customers. And this helps together, indeed, with a very strong legislative framework, because, as was said earlier today, financial literacy does not mean that the fences should go down anyway on protective legislation. But to go to the question on risks and opportunities, I personally think that digital banking is absolutely great, because I remember the times when you had to go to one of these banking offices, stand in line, or even worse, stand in line outside in the rain, and then the bank would close at 5 o'clock on Friday. I now manage I have elderly parents and an elderly aunt. I manage my own finances, plus the ones of my parents, plus my aunt, all from my phone. So this is the positive in it. The same is tools when money becomes virtual. Again, I've mentioned before, for children, to indeed the idea that you don't have a savings book anymore, or a wallet where you see your pocket money actually shrink. There are some good tools, especially for the digitally savvy youth, because there is one tool which is my favorite always, where your pocket money is a pile of money, and whenever you spend something, you see it burn. So you actually literally see in front of your eyes that you're burning your money, which is again the creativity of digitalization. But now to the risks, and they are certainly there. One of them is my father has dementia, and you see that then banking services become really difficult. He wrote down his transfers, he made mistakes, they get sent back. So there's solutions. One of the solutions is, this is where you require coaching. And again, you go back to the trusted coach of your bank that needs to come home. And then when his illness started, I was able to tell him still to do it on the computer. And this I say very much on a personal title. I loved IBAN name check, because it meant that he could not make mistakes anymore when filling out the name and the account number. So here you see things that we can deal. And again, it's the human involvement in there. The same with fraud. I think fraud is really a big problem, and that is also, it's not only fraud, it's not accessing the system by crooks, but it is what they call approved payment fraud, so that people, my mother happened to get and it's all about me, I'm sorry for that, all about me and my family, but it makes it tangible. Apologies for that to everybody, but she got a text from my daughter. Hi, Grandma, I've lost my phone. This is my new phone number. You all know this. Yeah. And it took me 6 phone calls to my mother to say, no, it is not my daughter. You need to block and delete that phone number. And she still believes that my daughter lost her phone. Anyway, so there we have a serious problem. And the same is with TikTok. And there I have a question to Tom as well. Because all the good things we've done in MiFID, because I do agree that advice has been a little bit the orphan in the MiFID ranking of execution-only advice and managed portfolio. There we may want to have two, but my question to you is the access to your app clunky? Because sometimes you have to answer so many questions before you're allowed to invest. Whereas if you compare that to this nice TikTok influencer who tells you to invest on that on the Bitcoin, it's all fine. So that's the, and then the last indeed is lack of information. We need to get more information, and even I'm vaguely associated with banking. Even I find it sometimes hard to get the right information at the right time to make an informed decision. So there is still a lot of work to be done, but all in all, I don't want to stand in the rain anymore. I want to do it on my phone.
Absolutely. That's Tom. You want to see if you got a question? I think Colleen wants to come in as well.
First of all, I think it's a bit of a misperception that young people trust TikTok per se. they're not stupid. That's what I learned.
No.
I
have 11-year-olds at home. I beg to differ.
But he has a Rolex, so we can trust him.
Secondly, so about the regulatory framework, I think that's very interesting. So at the beginning when we started, so I have had a lot of experience in investment advice, financial advice, I think it's actually more important, and also wealth management. But what I saw is that the requirements, you have to draw the picture of your financial situation, what's your risk aversion, go through all the steps. Those are creating huge barriers for a person who wants to start investing, start saving with small amounts. He or she is not going to go through that whole process. So I thought, no, that's not going to work, because you were going to ask about the investment goals and all these things. Now, for instance, young people, they really have no clue how their life will go. No. So the first thing is, I just need a pile of money. Maybe I use for a world trip. Maybe I'm going to live together with some. Maybe I'm going to marry. I don't know. But that's my goal. And those goals change over time, because you get children, maybe you divorce, all these things happen. So those are all barriers you add. So we've chosen on purpose an execution-only framework, but where we said, okay, we put the user in control, but the user can only select responsible choices. So whatever you actually choose, you can never do something wrong, and it's flexible. So if you take your money out at any time or you want to change something, there's no friction. I think you're right.
Colleen, I think, and then...
Yes, so I think coming back in on, I suppose, the importance of information and accessibility, I think there is a unique opportunity with all the legislation and regulations that are coming in, that even at a European level, there needs to be a little bit more joined up thinking, because we've new retail banking strategy, we've heard about accessibility, social pillar rights. The reality is all those pieces of regulation produce a phenomenal amount of documentation. And it does put a huge amount of obligations on financial services to get that information out. But then that's the wall of information that consumers and individuals face. So I think there's a piece of translation, interpretation, design that needs to happen in terms of how do we, ultimately do a plain language edit on that. Because at the end of the day, most individuals, if they are given clear information, can by and large make their own decisions. They can seek further clarification, they can seek advice. But if they're given clear information, they can make their own decisions. So I think there is kind of an onus on the European Commission to do a little bit more joined up thinking between the public service obligation, rights and accessibilities that match in then with all the financial regulation. Because if we can get that right, we will create a society that is more financially literate, is more inclusive, and is more resilient.
No, I think that's definitely a take-home message for us. I guess that the tendency in recent years, and not only for financial services, by the way, has been that yes, more information, which indeed has then end up sometimes with big piles of information, which at some point obviously becomes so complicated. People, I think someone said this morning, you just put them somewhere in the door, and then of course, even if the information is there, no one will really have the time or the interest or the enthusiasm or energy to read through it.
It's also, I suppose, trying to look at it a little bit more creatively in terms of, how that information is conveyed. I think that, you'll see it through kind of young people. The power of the visual is incredibly underutilized in terms of we're trying to translate things into multiple languages. But there is sometimes a universal visual language. So looking at how we can convey things visually, and the reality is people don't have time. People don't have literacy across a range of languages. Can we look at doing this in a different way? I'm actually an art historian by training and an interpretive planner. I ended up in education and access by default. So we're actually in a way going back to the Middle Ages. It's about the power of the visual and how we convey really complex information and very complex in some sort of universal language.
I think that's right, and I think over the years that's what we tried also at the European level with things like key information for usage, for example, the PRIPS fact sheet. But then even then, when the idea really is to have things which is short, simple, visual, it becomes a little bit too complicated.
And maybe it is an opportunity to link in with young people because ultimately we are all very busy. We all have about 3-minute attention spans. So it's what can you convey visually, orally, in about 3 minutes.
Indeed.
Otherwise, you lose people. And we've probably lost half the panel after lunch today. We're still talking.
I'd be happy if you even get the 3 minutes. Anne-Sophie, please.
Well, first of all, I would like to reassure Wim. We are not asking for digital online banking on your phone to be discarded and to move back to the old days. That's not what we are asking. Of course, digitalization has brought a lot and has brought a lot also to support digital financial inclusion. This we are aware of. But at the same time, we should not forget that we are also leaving people out, and a significant number of the population out. If we do not offer more accessible digital financial services to start with, because your mobile, Wim, you may be able to read it, but you have many people who are not able to read enough and to use a mobile phone to stay within the latency that is foreseen for you to answer. And this is done on purpose. And here I want to say we have a huge challenge on how to reconcile financial inclusion, digital financial inclusion objectives, which would require longer time, bigger funds and all that, with the objective, which has been so far the key objective at EU level and at national level, to go as seamless and as frictionless as possible. So that is where you have conflicting objectives. And something has to be done. A solution has to be found. Ask the technicians how they can reconcile both. And on the documents and the information that have to be provided, the key information documents, those are wonderful. Remember, we used to have very different types of information being sent to us from different providers. You wanted to compare. You were not able to compare products before you made your informed choice. This has helped a lot. And they are written in plain language, at least in Belgium. But I've never heard from our members that are complaining about those documents. So, and we do represent all the persons who come also from, I would say, rather lower income as well as higher incomers, so all kind of backgrounds. But those documents, this was a big improvement that was brought by EU legislation. So don't go back to the old days when nothing existed, because that's going to end up creating more trouble for people.
Thank you. It's also nice to once in a while get some good words of what we've done. Wim, please.
Very quickly now. Anne-Sophie, I agree with you, and I think that the ERPB does important work there, because the whole point of inclusion is that you include people in the design phase, in the legislative phase, and ERPB does important work. Another example that I've experienced myself, and that works very well, is that the Dutch Central Bank has a society dialogue on payments.
Yeah.
And there is where you see visually impaired and potentially excluded people discuss on the balance between the safety features and the accessibility. And actually, I think that the Accessibility Act will also force a redesign. But I think we are pretty close together, and it is always a challenge.
Yeah, but that's in the Netherlands.
But
There are 26 other countries.
yeah, but here you have Jean-Paul. The Netherlands doesn't have that, and we have Commissioner McGuinness, and she is for all of Europe, so we're safe.
But anyway, by June 25, something has to happen for everywhere.
Yeah, true,
Yeah.
true.
Yes, please, absolutely. Wendy.
Yes, I think it's interesting because I recently moved to Brussels half a year ago from Stockholm, and Stockholm is extremely digitalized. Everyone is using a mobile pay app for most of their payments or using a card to do contactless payments. And I also noticed that a lot of my friends, because I studied there, were using Klarna. So doing most of their shopping on debt. And then people were also studying at home, especially during the pandemic, using Uber Eats. And then I moved here and I met lots of people from different countries, and they never used Klarna, they never used Uber Eats, they don't use these everyday apps that we see as normal back home. So therefore, when it comes to all of these apps, even if they exist, not everyone is using them. And I also have friends who live in Stockholm who don't use all of these apps. And another interesting thing I see when it comes to managing your own personal finances, because I was a lot in the startup ecosystem in Stockholm, and the young people there were coming up with apps for saving for your own first apartment, because there is currently a housing crisis in Stockholm, maybe also most big cities in Sweden. So it's really fascinating to see how young people are turning into solving their own problems through digitalization. But I really wish that this would be a possibility in all of Europe, and not only in the more digitalized countries in the north.
So we wanted also the opportunity to ask some questions from the audience, but before we do that, and I did warn the panelists that this may come, if you were to rule the world for 30 seconds, and I would ask you to stay within the topics of financial literacy, resilience and inclusion, what would you do? And I will start here with you, Wim.
Well, actually, it is what the OECD, Commissioner McGuinness, Chairman Servaas are doing now. Because what I've been saying constantly is there is this huge ecosystem of public partners, private partners, and academia that do fantastic things together. And to connect these people, that's what I will do in my 30 seconds.
Excellent, thank you. Mindy?
I agree with you. I think collaboration is extremely important. And I would also make sure to focus those who are part of the second half who are not financially literate, because we saw on the results that almost 50% are, but it's more important to focus on those who are excluded, so that the whole, all of the financial products that are developed can be inclusive, or as inclusive as possible.
Tom, your 30 seconds.
Yeah, I would do two things. So first, make finances obligatory at middle school or secondary school. So children ask the right questions to ChatGPT because they're knowledgeable. Second, I think I would continue, I asked the EU to continue with what they did with PSD2. So open up financial information, but include much more products. So think of loans, but also pension data. Pension is the big time bomb. I think if you would open up this world of data, the market will create solutions to help people address this problem. So you can actually
feeling that your wishes may be granted.
Yeah. Okay. You can, but do it as fast as possible. Because with PSD2, it took a long time. But I think that it will enable it will solve a lot of problems by itself. Okay. But
That's what we do in the Commission, and in this panel we make dreams come true. Colleen, please, your 30
I'm
seconds.
going to use the coin analogy again, and people know the chocolate coin. So I would ask, I suppose, those individual or group that are financially excluded, what do they want most from financial services? Ask the financial services what can they provide, and be the chocolate and pull it together. Be the solution.
The chocolate, the solution. Very good. Chocolate's always the solution to all problems. Anne-Sophie.
To complete the proposals here, I think the digital aspect is covered already here. So I would really introduce financial literacy courses to teach young children and adults of all ages on how to use cash properly. Because soon, and it's starting with Sweden, you will need to teach people how to use cash again.
Indeed.
And use it well.
Absolutely, absolutely. So I think we have time for one or two questions from the audience. Who would want to ask the panelists a question about chocolate or cash or anything else? Yes, please, gentleman over there.
I just wonder what the panel thinks about the role of peer groups, because peer groups have not mentioned at all, and we know that especially young people from 14 years old get their orientation by their peers, and even the older ones. The people in the rush hour of life inform themselves very much by their peers. So what are your ideas, and how is it linked to digitalization?
Yeah, someone was mentioning that earlier, that young people go to TikTok before they go to Google. Colleen, please.
For us, it's a critical part of what we do in terms of peer learning and peer ambassadors, because at the end of the day, we sometimes can't speak to the particular experience of a group. So for instance, in Ireland, the travelling community, unless you're a member of that community, you don't have the lived experience. So we would tend to kind of work with those communities and find peer ambassadors to find out, what are their particular issues, whether it's about health literacy or financial literacy, and to work with them in terms of raising awareness, raising access, so that whatever programs we design are relevant to those communities. And we're doing similar work in prisons, with migrants. So for us, it's a critical part of the work that we do.
I have seen great work in peer groups. I've seen, and also a negative one, which I will end with, but the great work is, I've seen indeed the mobilization of peer groups in rural villages in India, and also the activation of communities of women in Africa, which are great. One of the reasons why many of the financial literacy courses also aim for 10 to 12 is that because after 12 peer groups become so important. And by the way, I have the guess that Wikifin Labs also has introduced the box approach to create a team spirit, a peer group there. So that would be my guess. The negative one of peer groups that I've seen is money mules, where you see children of 15 and 60 who almost always get pressured through a peer group into financial crime. So it's an important topic, so thank you for raising it.
Other questions?
They all need that chocolate.
Yeah, lots of chocolate, solution to everything.
No, Commissioner McGuinness.
How many of the panel have cash in their pockets?
I do.
I might actually exceptionally have some.
How many have pockets? Sorry.
Yay, me too.
I think we have a gentleman over there.
Thank you. This was really, really insightful. So I found it quite interesting that there was a suggestion that we should teach kids to deal better with cash. And you used the term coin quite a lot. I just look into the future a bit and would assume that in 5-10 years' time, kids will stop using cash in many of the EU countries, as we already see in Sweden. So I would be really interested to learn more about what you think, how we should change financial education, because kids might not be able to use cash in their daily lives, and they might not want to, and they spend a lot of cash, or they spend a lot of money, in the digital economy, which by definition will be virtual, will be cashless. So I'd be keen to hear your thoughts on how to change financial education and how to measure financial literacy in such a digital space.
I think Ann-Sophie launched the idea that actually we should bring in as part of financial education also how to use cash. But if someone wants to come in on that.
I'm a big fan of this visualization, the pile of money that burns. So I say that anything, the images that all the panelists mentioned, is yes, it may not be real cash in your hands, but you can very well visualize it, I think.
Tom.
Yeah, also, yeah, I'm a firm believer of that. We all do it also. I think you can visualize very well the same as having real cash in your hands. For instance, with us, with investments, if you add something that the numbers just turn up, just you have to really have the feeling, I put something in, because something moves. All these things that I think give the same feeling in the end. Although, if the internet goes down, it's really handy to have cash, because otherwise we go back to a barter economy. But I think for children, it's pretty much the same.
Can I mention that cash is, for the moment, is the only form of public money that we have. Remember that. And for me, it's enough to continue to teach how to use cash and what is a coin and what are the banknotes. And also because internet can fail down at any time, or we may have really strong disturbances that would really put the system down, maybe in a local area for technical issues, or even at a much broader country level or so. So that is why you have also to teach children how to cope when they go in the forest, how to find their way, what to do and not to do. Just because one day they may end up in a place where they will have to use some skills which are not taught anymore because children are just living in cities and they don't even know anymore that milk comes from the cows. It's just part of the basic things we should remember.
I think this issue about things breaking down, these are real life experiences. That kind of some shopping malls, some chains have to close down for a week precisely because the payment system has been
was down.
Cyber attacked But anyway, I guess we will have to close this panel now because there's another exciting conversation coming up here on the stage. I will not attempt to summarize. I think it was all super interesting. I still kind of feel that, yes, digital comes with a lot of opportunities. It is important for inclusion, but at the same time, we need to be wary of the risks. And of course, having some cash in your pocket still may be very useful also for the rainy days. Please join me in thanking our extinguished panel, Wim, Mindy, Tom, Doreen, and Ann-Sophie.